As we wait for the Fed, we have some committee moves to tell you about. Weiss, we're going to toss it over to you. It's your time now, Weiss. It's your time. You just bought
Joe,
more.
could you get me lunch?
You just bought more Nvidia. Well, ignore it, Joe. Ignore it. We just bought some more Nvidia. People calling this one of the biggest momentum trades of all time. What made you buy here?
Well, I bought it here because of the momentum. I owned enough of it. I just thought that as soon as the number hit the tape, the stock is extremely liquid. It traded more than 10 million shares pre-market. So it was a good opportunity to get some exposure on a trading basis, coupled with fundamentals I think are exceptionally strong. So from that standpoint, it was sort of an easy one to get into.
Easy, though, because you're just highlighting the multiple expansion in the market. I mean, Nvidia's multiples actually declined, but still trading at just about 47 times forward PE. So that's easy for you to buy into?
Yeah, for the trading part of it, it's absolutely easy to buy into because the catalysts were there. The catalyst being that the market was going to go higher today. So immediately on the number, right, the futures and the pre-market traded up. I think I bought Nvidia only up $1 a share. So I'm not getting rid of my other position, which is not one of my largest positions, because I've never been comfortable with the valuation, even though it's not excessive when you look at the growth. But I just thought it was an opportunity to get advantage of. The Qs had already moved nicely. Everything else had moved nicely except for ASL and this. And then they too moved. So
Joe, I see you over here shaking your head, but worried at all about concentration risk? Actually, Apollo's Torsten Slok out with a note today talking about extreme concentration and returns in the S&P. Basically, I'm going to boil it down. Everybody can read it home, but basically just saying if Nvidia starts to decline, then S&P is just going to be hit hard.
Frank, I run an equal-weighted strategy. The distance between the equal-weighted performance and the performance of the S&P 500 has not been this wide in nearly 30 years. So, look, I'm okay with that. I understand it. I've been doing this a long time. It's part of the cyclical nature of the business itself, but you have to respect right now the performance of Nvidia, of Apple, of these mega cap companies. They're leading the charge higher within the marketplace. We all understand the fundamental reasons why, but I'll tell you what, Steve's buying today. The reason that you're seeing the advance today in Nvidia and Apple is because the market is dominated by algorithms. And on a day like today, the algorithms are pivoting in the direction of these companies which have shown the very strong performance. Apple, by the way, is now back to being the largest market cap. I think it's at 3.34 trillion. Nvidia has to step it up. It's fallen into third place. But again, it goes back to what I said at the beginning of the show. Trends are a very powerful variable within the market, and you don't want to fight the trend. I've often said if you're looking to be a seller in the marketplace, you want to do it when the market rolls over. It gives you the evidence that it's beginning to do so. There's no clear evidence to that. Nvidia and Apple are representation.
Wait, I want to come over to Anastasia.
Let me just give you
one second, Weiss. 1 second. Over to Anastasia. So you kind of, your ears perked up. I saw you kind of look up when we were talking about concentration risk.
Yeah, I wanted to chime in on that because, I mean, obviously the market is very much contingent upon what Nvidia does, what big tech does, but not only so at this moment. And by the way, going to last Nvidia earnings, my thought was, it would be nice if they delivered, but if they don't, we're still going to be okay. And the reason I say that is there's just a lot of broadening that is happening around the world right now within the equity markets in the U.S. and elsewhere. And so, for example, one broadening that I'm watching, it's not just the U.S. consumer-driven economy, but also the manufacturing side of it that's picking up. It's happening in the United States, it's happening in Europe, in China, Korea, Taiwan, and more. So I like that cyclical momentum. I also like, for example, that it's not just the U.S. economy, but it's the European economy that's also doing better. We're out of the technical recession. We have the ECB rate cuts. So that's another cyclical momentum. And then to kind of circle back all the way to Nvidia, it's not just Nvidia that is participating in the semiconductor upside cycle, for example. It's other players in the data center space, but it's also some of the, PC semiconductors and some of the memory and some of the storage. So I think that one stock is important, but there's a lot of other things that can support the market at this point.
Okay.
All right, guys, this is the part of the video where I'm going to break down the stocks that were mentioned in the CNBC clip. Today was all about Nvidia and Steve Weiss adding more to his Nvidia position. Would you just look at this run that this stock has been on? And this man is adding all the way up here at 123, 124, somewhere in here. That's how much conviction he has. Let's see, just from November, we're already up, counting today, 213% in just over 6 months. That's a pretty big move. He's betting on this momentum to continue. I think it looks more like we need a cool off period to consolidation sideways. I think we need to spend a couple weeks, maybe like a month, going sideways around 120 to 130, and then we'll have room to blast off higher. But based on technical analysis, it's not looking like this move has all too much more to offer. If you see, we can measure this move and we can go back to the last move, almost the exact same height as this move before we started pulling off. Now, was Nvidia done? No. Was it done going higher? Was that the end of Nvidia? Nope. It just needs a little break, guys. When it goes up so fast, so much, it needs a little break, and that's healthy. And that's exactly where we are right now, up at the top. So do I agree with this move? I don't personally, but we'll see how it works out. It'll be fun to watch. For some reason, there's a huge wick on TD Ameritrade all the way up to 195.95, but that is not a real order that was placed. You could argue we had a triangle consolidation right here, and now we're breaking out to the upside. Nvidia is having a nice day, up 3.5%. Let's just take a look at some of these other stocks. Alpha's up 6.5%. Apple's up another 5.5% plus. Tesla's up almost 5.5%. Nvidia 3.5%. Guys, these stocks are blowing up today. They are going straight to the moon. We've got all of these major AI stocks at all-time highs. We've got the QQQ and the SPY at all-time highs, guys. We've had several stocks run double digits percents just in the last few months, guys. So these stocks are starting to get extended. Just caution a pullback to sideways correction. Just keep that in mind. We can't always just keep going up this fast forever. But just because we do have a sideways consolidation or a pullback, that does not mean the move is over. This AI trend is supposed to continue for years and years, maybe even a decade, and this is still just the beginning. But that doesn't mean you can't get hurt 10-20% on a quick pullback. So just be ready for it. Other than that, Nvidia is looking bullish. We do have a pretty big distance to the 45-day moving average and a very big distance to the 200-day moving average. So the farther we get away from these moving averages, the faster it's going to snap back like a rubber band towards them when we finally do start consolidating or coming down. Anyways, those are just my thoughts. I hope you guys enjoyed the video. I hope you're making money in the market. Smash that like button and subscribe, and I'll catch you in the next video. Peace.